How to get a car loan interest rate without a hard credit inquiry. Many of you guys are looking for new cars or used cars, and that question of what is my credit and what's going to be my interest rate always goes through your mind. In this video, we are going to dissect some information on, hard credit versus soft credit checks, and really just how to get a loan interest rate without getting that hard credit inquiry. So if you guys appreciate that information, make sure to drop a like on this video. Guys, this is Phil with BLP3 Motors, and let's get started. If you were shopping, it's a good idea to get pre-approved for a car loan before heading out to the dealership. With a pre-approved loan offer in hand, you can quickly decide whether the finance rate the car dealership offers you is the better deal or not. Being pre-approved means you're free to focus on the price of the car and make sure you're getting one that best suits your needs. And since a pre-approved shopper already knows the loan's repayment terms, there's no need to get caught up in lengthy payment negotiations that take place at some of the dealership showroom negotiation tables. But if you have less than platinum credit, and I know a lot of us are in that situation, here's the snag. It's not always easy to find out what your actual interest rate will be. To get that, you may need to have your credit run, and that's usually done with what's called a hard inquiry, which can create new problems. So here's a problem with the pre-approval. If you have top-tier credit, usually meaning your FICO score is 700 or better, you may not need to have your credit run to know what interest rate a credit union or bank will offer on a car loan. Top-tier credit will almost always get the lowest interest rate, and a visit to a credit union's website or a quick call to a bank is really all it takes to find out what that is. So once you know your interest rate, figuring out a payment using a car calculator is going to be a snap, guys. But it is not as snappy for the borrower whose credit is not tip-top, and that's kind of where most people are. Rates for second and third tier credit scores are almost never advertised, so anyone whose credit is fair, average, or good but not quite excellent, has to guess the loan's percentage rate and the corresponding car payment. The only way around that is to let a potential lender run a hard credit inquiry. Some car buyers find that worrisome for a good reason. If they've recently had other hard credit inquiries, one more could result in an immediate drop in the credit score, putting a good loan out of reach. So let's talk about hard versus soft credit inquiries. Hard inquiries are what lenders use when you apply for a loan or credit card. This inquiry will stay on your credit report for up to 2 years. A single inquiry will likely shave 2 to 8 points from your score. A couple of points shaved off your credit would typically not be a big deal, but some people seeking pre-approved car loans report that their scores have reduced as much as 50 points because of multiple hard inquiries. Such cases aren't the norm though, but even a small drop is trouble for shoppers whose credit score is on the bubble. The loss of just a few points can mean the difference between qualifying for a loan with a low APR or one with a considerable higher rate. Guys, there have been plenty of shoppers who miss out on good financing because their score was 7 to 10 points below the acceptance threshold for a particular credit tier. As a consequence, these shoppers had to pay hundreds and sometimes thousands of dollars in extra interest over the life of the loan. On the other hand, there is a soft inquiry, which is a credit check that takes place apart from the actual loan or credit card application. An example would be an employer checking your credit before offering you a job, or an insurance company checking your credit before providing you a coverage quote. These inquiries will show up on your credit report, but they won't affect your score. Now here's some good news. Let's talk about pre-qualification. So the good news for car shoppers is that soft inquiries are what lenders use for pre-qualification. Pre-qualification is becoming popular in the credit card world and is slowly starting to show up in auto financing. Capital One, for example, offers car shoppers pre-qualification for an auto loan and advertises that they won't affect your credit score. This approach will let you preview a loan rate and calculate a car payment without losing credit score points, as you would with a pre-approved and hard credit inquiry. Now, I'm not sure how many of you guys have heard of peer-to-peer lending, but check this out. Another lending source that uses soft inquiries are peer-to-peer lenders, which offer unsecured personal, student, and auto loans that are often funded by individuals or groups of individuals as investments. Lenders such as Prosper, Lending Club, and Upstart offer car shoppers pre-qualification for loans that can be used towards auto purchases. These non-traditional lenders also say that their inquiries will not affect a potential borrower score. and so represent another way for borrowers with less than perfect credit to know where they stand in terms of APR and payments without a hard inquiry. Peer-to-peer lenders handle pre-qualifications online, and applicants can expect to have results back in just a few minutes. But guys, keep this in mind. Peer-to-peer lender loans may include origination fees, which most auto lenders don't charge. So should you guys choose that route of peer-to-peer lending to finance the next car, just be sure to factor that origination fee into your calculations. And so, last but not least, I don't know if you guys know this, but you can bring your own report. So if you don't want to get pre-approved, pre-qualified, or guess a dealer's interest rate, there's a fourth option. Run your own credit report and take it with you to the dealership. The Fair Credit Reporting Act requires 3 credit agencies, the Equifax, TransUnion, and Experian, to provide you with a free credit report once a year. Now, this report won't include your credit score. However, the agencies will charge an additional fee if you want that, so have a credit card ready, guys. Getting your report only takes a few minutes once you've logged in, and since this is a soft credit inquiry, it won't hurt your score. Once you've assessed your report, be sure to print out the whole report, not just the summary, guys, and I'm just going to say that. Make sure to not just print the summary. And spend a few minutes with a finance sales manager. The manager should be able to tell you what rate you qualify for on the spot. Now guys, I hope this information was helpful for you in your journey to getting your next car. I know that it's a really stressful time, and so I really wanted to make this video to help people out there that are trying to figure out what their next step is. Guys, I would recommend getting a pre-qualification before heading to a dealership. That way you really know what monthly payment you can afford and what the interest rate's going to be. That way when you're having those negotiations, if you want to at the dealership, you can see if they're offering you a better deal or not. Now, if you guys are interested in me doing a video on 72-month loans and if that's a good thing or bad thing, let me know in the comment section below. And if you've made it this far, guys, please like this video and subscribe if you're new. I appreciate you guys. Thank you for your time, and I'll see you in the comment section.